So I was doing a little bit of a perusal of the different super investor portfolios this morning on Ticker, just for a bit of fun. And I actually found that one of my favorite super investors, Pat Dorsey, actually bought into a new company called Semrush. Now, this company doesn't make up a big portion of his portfolio. It is a 2.5% bet. But the really interesting thing, well, I'll tell you that in a second. But before we dive in, let me know in the comments below if you know much about Pat Dorsey's investment style or have any information about his long-term returns, because I'm still very much trying to learn about Dorsey and his investment style. I picked up a book recently. It's called The Little Book That Builds Wealth. And well, I'm still working through it, but basically it describes a high level of what Dorsey believes in. And the main thrust is that Dorsey wants to buy companies with defensible moats that he can hold for a very long time that will hopefully increase in value as time goes on. It's more of a long-term compounder approach compared to trying to buy assets that are cheap on a quantitative basis. I'll have a link to this book in the video description below. I would definitely check it out. Highly recommended so far. So this video is basically going to be a discovery video where I'm trying to learn, the basics about Semrush. I'll be looking at some of their metrics on Ticker and Morningstar and trying to get a feel for what the business actually does. So let's dive into that. So as I was saying at the beginning of the video, Dorsey has made this new purchase and it makes up 2.5% of his portfolio in a company called Semrush. Now, Dorsey usually makes pretty concentrated bets. He only has 9 positions in his portfolio according to Ticker, and the top one, Facebook, is almost 18% of his entire portfolio. So it is a little bit surprising to see such a small position, but there is a little bit of a kicker with this one. He owns 11.5% of this entire company. So I think that's pretty interesting. He actually had to disclose on the last day of August of this year through a 13G filing that he owned 11.5% of this company. So this is an interesting case because it doesn't fall within the typical 13F cycles. The 13G is required when an investor owns more than 5% of a company, I think. So it's pretty unusual. I don't as of yet know why Dorsey decided to take such a large position in this company, but hopefully that'll become a little bit more clear after working through some of the top level metrics for this company. All right, so let's actually hop over to the actual company page for Semrush Holdings here on Ticker. As we can see, the company does not have that much operating history. So this only records it back to March 25th of 2021. So it looks like this company has not been public for very long. And in that time frame, we can see that the company has grown 143% in about a half a year. I was hoping that maybe we would see some sort of information that Dorsey was a private investor in this company, and he actually had to report once the shares went public that he owned over 5% of this publicly traded equity. But if that were the case, then we would have seen this pop up on his portfolio in at least the past quarter. So still not sure what's going on there. But anyway, the company isn't huge by any stretch of the imagination. The market cap is $3.7 billion. So still pretty small. Potentially a lot of opportunity for this company to grow. And we can read a little bit more about the company over here. So according to this, Semrush develops online visibility management software as a service. So already we're seeing another trend of Dorsey buying into SaaS companies where it's asset light, high returns on capital, and very minimal assets on the books. It helps businesses to run search engine optimization, pay-per-click content, social media, and competitive research campaigns. Companies offers insights and solutions to build, manage, and measure campaigns across various marketing channels. I'm hopping over to Morningstar because they also offer pretty good company profiles for just on the high level of the business description. This one says that the platform enables subscribers to improve their online visibility and drive traffic, including to websites, social media pages, and distribute highly relevant content to their customers on a targeted basis across various channels to drive high-quality traffic and measure the effectiveness of their digital marketing campaigns. Okay. All right, so it sounds like they're offering services to manage and optimize online advertising campaigns. So say, I might be a user of this. If I wanted to drive traffic to my YouTube channel, for instance, I probably could use Semrush's product and get more eyes either on my channel, on my Twitter account, or things of that nature. I want to go over to the website and sort of try to find out something about the product first, because before looking at this holding, I had never heard of this company at all. I mean, there are a ton of software products out there, and this one is probably really good, or else Dorsey wouldn't have spent a lot of money investing into this company, but we'll check that out. I like this, trusted by the world's leading brands: Tesla, Apple, Amazon, Quora, GE, Forbes, and Booking.com, a bunch of really high-tech names that trust this service. So let's see a little more in depth about. They offer SEO, grow organic traffic with our SEO tools and workflow, content marketing, create content that ranks, okay, market research, so getting to understand who you're actually trying to target as a marketing campaign or whatever, tips and tools to help you advertise better, and then we have social media strategy building. So probably I'm not going to go through it in this video, but one of the first things I would want to do is to basically go down and deep dive into each of these see what's inside categories here, and really try and see what the tool actually offers. The CEO has some visibility here on the website, which is good. What's more important to me is what his financial stake is in the company, and maybe we can find that out through ticker or some other means. All right, so on the plans and pricing page, they have an annual savings, which is good. Get more of those revenues booked up front, which is good. But if you pay by month, you're going to pay $120 just for the base package, which would be good for small teams, individuals, things of that nature. The margins on this have to be huge. That's my first assumption, at least. Already, I'm pretty excited about this because it looks like something that, well, I don't know if necessarily I can afford to pay for it, but it looks like a tool that is relevant to me personally, which is nice. Let's hop over back to ticker and look into some of the financials here. So we'll go to the financials tab. So the first thing I'm going to do is come over to the balance sheet tab and scroll down to check out the net debt number. I feel like this is a pretty important number to look at, and you can kind of learn a lot about a company. They have a negative net debt of negative $175 million. What negative is good in this case. That means that they have more cash and cash equivalents than they do short and long-term debt on the books. So in this case, we can see they have about $180 million in total cash and short-term investments, and they have $5 million in debt, and that's where that negative 175 comes from. So first of all, the company is in a great financial position just based on that number alone. I mean, they can pay off all of their debt just simply with the cash balance. So there's pretty much zero risk of them going bankrupt or going out of business due to debt stresses or anything like that. All right, I want to hop over to Morningstar because I like one of their views a lot. It gives a great high level look at the company. So right away, one of the first indications is all these lines of missing data from years in the past. The company does not have a long operating history at all. And if we're looking through the lens of Warren Buffett, for instance, that's not something we typically want to see. But it looks like Dorsey is seeing something, even though this company has only been around since 2019. Buffett prefers to have at least 10 years of operating history, if not a lot more. So as we can see, the revenues are steadily marching forward. We had $92 million in revenue. That went up to 125, and then all the way up to currently it's at about $145 million in revenue. Additionally, the gross margins keep peaking up as well, almost 1% a year. Now here's where we start to get into a little bit of trouble. The company, of course, is losing money. So the operating margin in their first year business was almost negative 9%. Slowly, they have brought that down to a little bit less than 1%. So the net income is also in a trend that obviously we want to see. Now, it's not unusual for a software company, especially in its early years, to not be profitable. They still have to grow their business and they're investing heavily. So the net income, negative $10 million the first year, negative 7. And then currently they're losing about $2 million per year. Now, if we compare that to their cash balance, which was what we'll call it $175 million if we subtract the debt, they can weather this storm of losing net income at the expense to keep growing their revenues. So this trade is probably worth it for this business. We see a slight dilution in the shares, 124 when they first appeared with the financials, and then currently it's at 136 million shares. Their capital expenditures are not increasing too much. It's staying steady at an average of about $2 million per year. So they're not investing in any big projects or anything like that. So again, that is the brilliance of a software business. You don't have to expend heavily compared to Micron, for instance, who they have to build new foundries in order to continue to make better chips and things like that. One surprising thing is that they actually have positive free cash flow. So they had $13 million in free cash flow for currently. We probably want to go line by line and check out where that cash flow is actually coming from. But at a first glance, that's a positive sign. So even though the company is technically losing money, they have free cash flow to do whatever they want with. These ratios might not be too helpful because the company is losing money right now, but my expectation for this company would be that the return on equity and return on capital would start to shoot up based on their current trajectory, at least. I actually don't really like the insider transaction page on Ticker, so I'm going to go over to Morningstar and use theirs. I think it's just a lot more clear about what's going on here, and it lists the title and name of the actual person involved in the transaction. So we're seeing a lot of movement with the chief revenue officer. He has some conversions, getting some compensation through stocks, I guess, and then he has some sales of his shares. There will be more detailed information about this in a 10K, for example. I'm scrolling down. I just want to see the chief executive officer. It doesn't look like he has any sales. It's all this, the revenue officer, and then the financial officer is doing some sales as well. But it's nothing too shocking. The CEO right here, other acquisition, not really sure what that is. Maybe it had something to do with, shares of his company going from private to public. I don't know. Have to look more into that. But so far, I haven't really seen any red flags. Let me know in the comments if you noticed anything that sticks out that should be a red flag that I missed or glazed over or anything like that. My next steps for a company like this, I am pretty interested in continuing to look into this. I would continue to learn more about what their actual business does, continue to look at the products and demos of the products, maybe even try the product, see how useful it is. If Dorsey is looking for a competitive advantage, a moat that probably isn't disruptible or is defendable, then clearly the product has to have something special with it. I want to see what management is saying about the future trajectory of the company, if they have any insights at all, or if they're taking it one day at a time. That's something that we could possibly glean from some of their annual reports or materials of that nature. But yeah, it looks promising. And again, it's not a huge conviction for Dorsey. However, there is a possibility that he might add significantly to his position in this company. Although I'm not really sure about Dorsey's stance on owning large portions of public companies, because he already owns over 10% of this company. I don't know how much he would actually be able to buy, or willing to buy. So yeah, that is my first look at Semrush. It is a terribly named company with seemingly excellent financial position and probably an excellent product as well. But again, still more diving to do into that. And again, if you want to learn more about Pat Dorsey, I would recommend his book, The Little Book That Builds Wealth. I will have a link to that in the video description. If you liked this brief deep dive into Semrush, you may enjoy my video over here where I go into a deeper dive into Tencent with Investing with Frank. Let me know in the comments below if you enjoy this style of video where I take a first look at a company and sort of talk through what I'm seeing, what I'm looking for. Please like the video and subscribe to the channel if you enjoyed this. Thank you so much for watching this all the way to the end. I really appreciate your time, and I will see you in the next video.